In this case study, I'll walk you through an SPX options trade where I combined a calendar and a diagonal spread, originally betting on the market to fill a gap around 5,950 and then stall. The plan was to capitalize on time decay and stable prices, basically a slightly subdued delta exposure. However, the market had its own ideas. Early in the week, I opened the position, paying a net debit of about $555. I sold a diagonal call spread for 85 cents credit and bought a calendar spread $3.20 debit, leaving roughly a 50-point gap. The idea was that the market would fill the gap and then hang around the chosen strike, allowing the strategy's time value to work in my favor. But the SPX quickly overshot my target level, pushing the short diagonal leg deep in the money. This was a turning point. I had to decide whether to close that leg or keep hoping it would come back out of the money. Holding on would mean expensive hope, a lesson I've learned over the years. Deep ITM short options near expiration can quickly erode profits if the market keeps moving against you. So I closed the diagonal leg at a small debit, about 50 cents, which wasn't ideal but prevented further damage. From there, I focused on managing the calendar spreads. Because the market rallied strongly, the calendars became quite valuable. I closed half of them at $8.50, which was a big improvement from my $3.20 cost basis, locking in a solid portion of profits. The market remained strong, and ultimately, on expiration day, I chose to close the remaining calendars at the same favorable price of $8.50. Even though the position had room for potentially more profit if the market had paused, I didn't want to risk letting the deep ITM situation worsen further. In the end, I booked a total profit of about $1,095, nearly doubling my initial debit in a matter of days. The key takeaway? Don't rely on hope when options go deep ITM. Acting decisively, closing problematic legs early, and taking partial profits when available helps protect and enhance overall gains. This trade is a reminder that even when the market moves beyond your initial expectations, timely adjustments can turn a challenging scenario into a successful outcome.